Good morning. Good morning. I wanted to record a video that I used to cover this topic when we first started trading. And, as a group went along, I didn't feel the need to continue to bring this up. But now that we've expanded, we have newer people that may be struggling with some of the concepts, or just maybe we have seasoned traders who are struggling with finding consistency, who are not understanding what uh, they should be looking for or why, for that matter. So I wanted to um, actually come to the actual Zoom and actually show you. This concept is what I call framing the market. It gives us a reference point of what we should look for and where we should be looking. Before we actually go there, what I would like to do is kind of get an idea when we start looking at these charts. All I did was Google candlestick patterns, right? Because I want everybody to understand what we're looking for, right? So, first of all, there's three types of markets. There's a market that's trending up, a market that's trending down, and then a market that's in consolidation or moving sideways. This is what we call consolidation. Back and forth action, a lot of wicking out at both ends. You can only trade this market from the top to the bottom, and then you can trade it from the bottom to the top, right? There is no take a trade and let it sit for days, weeks, months, depending on the time frame of this chart, right? If we are pretending that each candle represents a month, then you're going to trade within this range for a month, then you're going to trade within this range for a month, then you're going to trade. So the scenario here. In this case, the month that you see this bearish order block, you can assume that the market is going to trend down for the next several months, which is awesome, because then you're looking for sales in whatever pair this is, and you're looking for the sale opportunities on those lower time frames as the market pushes down, right? It makes perfect sense if you ask me. And then the market comes down and consolidates, right? Gives you another bearish order block, and you push down for the next several months. Then the market gets down here to the bottom, gives you a bullish order block. Now you know we're pushing back up. Now, here's where people get confused. Once you get this bullish order block, what does that mean? It means you can throw the fib from the top of this move, right, to the bottom of this move. Or if you felt like it was going to give you, it was going to turn around here with this green candle, you could have did that. Throw the fib from the top of the move to this green candle and see where your 50% is, because you can buy the market back up to this level at the 50% or maybe the 78, right? You're going to mark your areas. And as the market pushes up here, if it gives you this wick, then you know your retracement is probably done and you can look to push down further. In this case, if you had fibbed from here to here, it would have gave you a reading of somewhere, 50% or better. Since there's no fib that I can throw on here, you have to imagine where your reading would be, and then you can buy this market back up to your area, look for rejection before you take it lower. Okay, these are the very basics of the market, and this is what I look for. It's no tricks, no gimmicks. This is how it works. Now, let's talk about healthy price action. You see the wicks on the candle. Every third candle, there should be a relationship between these wicks. So let's take this candle for example. Price opens up right here, pushes down, price pushes up, price that closes right here. The next candle, it opens up here, price pushes up, pushes down. Notice there's no bottom wick. The next candle opens up, it pushes down first, maybe, or maybe up first. It doesn't matter. What I want to see though is this wick touch with this wick. That is healthy price action. There is no imbalance. Then it closes. So all these candles right here have healthy price action when the market is consolidating, which is great. In my opinion, the only advantage that you have when you have healthy price action is you know that if you entered a position, for instance, if this market was down here, you know you can buy this market back up and it's going to come to this wick. So you know you can buy it up to whatever price this is. That's your advantage. That's it. With this market, right? Notice you have the wick kind of opens. This wick, you can argue that it touched, right? Then price pushes down. But what you cannot argue is that this wick, we never went back up to touch this wick with these candles. The market pushed down in expansion. There's no healthy price action here either. These are called imbalances, fair value gaps, whatever you want to call it. The market pushes away from here. Now, this is what we call expansion, right? When the market pushes away, it pushes away so fast that the price action is not healthy, right? Once it gets to the bottom, in this case, of its range, it pulls back. What does it pull back to do? It pulls back to mitigate these imbalances. And the first imbalance is right here. You can see we push right into the imbalance. We close that imbalance. This is a new imbalance. The market falls a little bit further, but we push right back up into this imbalance with this wick. Then we push and close this imbalance, right? The next imbalance that you should target as a trader is this imbalance here, right? So somewhere down the line, you want to see price come into and close that imbalance. It's either going to close it and push away and go further down, or it's going to close it and be going up. But these are the advantages that we have as traders, and this is what we should be looking for. Doesn't matter the time frame; it's all relative, and the market works the same way on those time frames. So, with that in mind, we can look and determine where we need to trade to, like where we can take that trade to, and what the objective of the market is. And I'm going to go to the chart now, a real chart, and we will discuss what to look for in real time. First of all, we'll just take this EC. Let me trash all these drawings, okay? So when it comes to framing a market, we want to start on the higher time frames, okay? In this case, it's April 29th. When we get back to trading, it will be May. So when I squeeze this down and I look at this from a big picture, right? These are all monthly candles. It goes back to 2000 and I don't know, 2004, right? So big picture, the market is just basically consolidating. It trades within a range, which is fine, okay? You just need some historical data so you can understand, where we are. The market pushed up, it retraced. It pushed higher, it retraced. This next high was a little bit higher. Maybe you can call that taking liquidity. it retraced. You get higher lows, higher highs until here. You go from this higher low to a lower high, right? Then the market comes down and breaks your low, pushes down. Now it comes back up to retest. So if you look at this chart, one could argue that since we retested this level, there are a couple of different things can happen. Either we're going to keep pushing up and break these highs to give us a higher high, right? Which would indicate to me that this from here, all this to here, if we break this high, this is just a complex pullback. And I can look at this entire range. I can look at this entire range as an impulse move, a pullback to go higher. Okay? But if this move stalls out here, which you see the wick, and we push down and we break this low, so if this move turns out to be this, right? If we break this low, I can assume that this was just a pullback. And I don't have to guess, guys. This is the beautiful thing about trading. The Fibonacci works, doesn't matter what chart you throw it on, right? So if I measure this impulse move from the top to the bottom, this pullback, we're right here in our golden zone, bro. This is the 78 right here. This is the optimal trading entry for a push down. It doesn't have to be perfect, but what we have to do, right, as traders, we have to understand what's here in this zone, right? So if I blow this chart up, there's probably a small imbalance from this wick to this wick. So from this wick to this wick on this monthly chart, there's an imbalance. We came ever so close to tapping into the imbalance. What we did do, though, is we created relative equal highs right here, right? A good reference point for liquidity. So then the market pulls back. So as a trader, I understand, hey, we got a bullish order block here. We pushed 2, but didn't quite break this monthly order block. So there's a good chance that we can get a pullback. Maybe we go higher and we liquidate these equal highs. We go right into this imbalance and push down, or maybe we go all the way up into this final order block, right? This zone right here, this, I don't know, supply zone, or I don't know. I don't trade supply and demand, but there's a zone right here, this order block. So maybe we can push right through all of this into this untapped zone, and then price may drop further. I don't have to know those answers. I just have to be aware that these are the possibilities. So when it comes time to frame my market, I need to find the top of the market and the bottom of the market, right? So what is the top of the market? The top of the market is I want to identify the order block, right? I want to identify this is a bearish order block right here. From wick to wick, it's a bearish order block. So this price did not violate, it didn't break this bearish order block. So this is the top of my market. Now I want to find on the same time frame the bottom of the market. Here's a bullish order block. Again, you go from wick to wick, right? And this is the bottom of my market. Where is my trading range? it's in between these two order blocks. You see that little bit of space here? There's where you're going to have a clean trade idea, right? That's the range of your trade. Any trade that takes place within these yellow boxes are going to be more, it's going to be more volatile, right? More um, back and forth action. It's because price is trying to break through, or it's in an order block, right? If you notice down here, when price, there's an order block here. When price gets outside of this order block, you get these nice big candles, right? And price moves pretty fast, up to these areas. So until it runs into resistance, there's an order block in this wick on a lower time frame. But until it runs into these order blocks, then you're getting rejection, right? That means price goes up, down, up, down. So it's the same thing when you see these wicks. So if you understand that as a trader, now you can drop down to the weekly. And you want to do the same drill on your weekly time frame, right? I want to see where my weekly order blocks are. Now, if I have a weekly order block up here, I'm not really interested because we're in this monthly order block. Okay. So if there's a weekly order block up here, that's cool. But you can see we're tapping the very top of these wicks. So I don't need to look any further up because we're in this monthly order block. I don't see any weekly. The further down you drop, you're going to see order blocks in these wicks. So the bottom of this weekly price is up here. Here's a bullish order block, which tells me that I don't even have this white box as a part of my range. When price comes down, it's going to run right into a bullish order block, right? So it's not going to be a smooth ride, right? Now, my price is here. About 120 pips down, I'm going to run right into a bullish order block. Okay, so let me go to the daily. I'm doing the same thing on the daily. Again, if there's no information over here, I don't need the information because this is the weekly order block and we're at the top of it. But I do want to find my order block on the daily, and it's way down here in the bottom. I can put a box around it if I want to. You guys can color code these or shade these, or some people used to write daily, DOB, MOB, WOB. If that's what you have to do, then go ahead and do that. For me, I don't need to do all these labels, at least not at this juncture, while I'm just showing you the basic information. Okay, so basically we understand that in order for price to go from here to this daily order blocks, it's a lot of turbulence, right? You might not have the stomach for a trade like this, right? But you have the information in front of you. So now that I am down to the daily, right? My trade needs to take place within these levels. I have to understand some things. When I go back to this monthly, right? We understand that this is an impulse move, right? We talked about the impulse move, the pullback. We understand that if I throw the fib, which we've done on this move and this leg up, price is past our golden zone, very close to our 78, and it's wicking, showing that it's pulling back. So knowing that price is pulling back I have to make an educated guess. Okay. So I can measure this impulse move from here. I can measure this impulse move and say if price is pulling back, where is it pulling back to? And the answer is if it's retracing on this monthly level, it needs to pull back to the golden zone, right? It's at least coming here before it breaks, before it goes up in to this high right here, to the negative 27, and possibly breaks that high. So it needs to pull back here. Then it needs to push up and challenge this high or break it. And in which case we already discussed, if it breaks these highs, we can expect a pullback and get a higher low, because this is going to be a higher low, and maybe we get a higher high and then a higher low and a higher high. But all we're doing is trying to anticipate where it needs to pull back to. So if I see this, it needs to pull back down here. Notice that it's under these order blocks, right? I don't need to do anything. I can go to a lower time frame, and I can look at it from this weekly. Same move. This is still the bottom, right? I can re-put my fib on here to do it again. So this is the zone. It's beneath your order blocks. So when I come down to this level, I like to make sure that the market hasn't pulled back to the 50%. So when you see these moves down here, the market started here, it went up to this high, it pulled back to the 78, and it kept going. So to me, I can move the bottom up to this level. The market went up here, it pulled back. 50% right here, then it went higher. So if it already did a pullback, for me, I like to move with the market, right? So now I understand that the market has basically went from this level, right, up here without actually pulling back. So this is the area, in my opinion, that there's a high likelihood that we need to pull back to, regardless of whether or not it's going to break higher or lower. So for me, the market needs to come to this area, right? So this is my personal point of interest, right? POI. You can shade this a different color if you want. You can label it if you want, but whatever you do, this is where I believe that price needs to hit. Here's the importance of this, guys. If price doesn't hit here, I don't have to do a damn thing. So we are in control as traders. If price comes down and hits this order block and pushes back up, I don't have to play. I can take my ball and go home. There are all these other pair over here that might give me exactly what I want. And this is the power that we have as traders. Okay, I don't want to go on a tangent, but I want to identify my POI, right, on this weekly chart. So what I want to see, you got this weekly candle that's telling you that we're exhausted, we're going to pull back. So a lot of times when you get these wicks up here, you might get another candle that pushes into the wick, and then the trade starts to deteriorate, the market deteriorates, and the price pulls back. You don't have to wonder where it's going. You should understand, hey, it's at least going here for a pullback. Maybe it's just going to push through here and break these lows. But at any rate, it gives you a 739 pip range that you want to see price push through. Now, again, if I have a choice in the matter, I don't want all these other boxes in my range, right? There are some of these pairs that we analyze that's going to be a white chart in between two yellow boxes. So the range will be clean and we'll get some type of movement with big, nice, big, thick candles, and it's not a lot of back and forth action. But understanding that you have all these boxes, which means you've identified order blocks on whatever time frame that we have to get through, you can expect this to be a more turbulent trade. Maybe you don't have the stomach for turbulence. Anywho, in my area, my POI, it doesn't just mean I set my POI and I'm content with it. We have to understand that this POI is a 212 pip range, bro. So we have to kind of jump in here and understand what the hell is in this POI. Why is this important? Well, first of all, when we talk about the candlestick anatomy, we understand that the top wick of the candle here, when this candle opened up, it should have came down and this wick should have met here and then price should have went up. So that means that there's a huge imbalance that should draw our attention. We can throw the GAN box, we can get 50% of this imbalance and give us a point of reference within our POI. Let me just do it. GAN box, I'm measuring from the top wick of that green candle, right? I measured from the top wick of this candle to this wick. I'm just interested in the 50. So I'm going to throw a horizontal ray at my 50. And then I'm going to delete this GAN box. And this line represents that imbalance being mitigated, right? So this gives me a more precise spot within this imbalance. So if I drop down to the daily, right? If you look, there's a daily order block right freaking there, right freaking there. So it's dang near perfect, right? This is a perfect target. Now, does that mean that Sunday I'm going to hop in here and sell it for it to come down here? Probably not, right? I have my moving averages. You're going to need to see price break structure, and give you an indication that it's pushing down so you can get in the trade. Your target area is here, and your final target is this line. Okay, and you can break this down to the lower time frames to the nth degree. If we go down to the 4 hour, 4 hour gives us a better picture, right? So on this 4 hour, we've already broken structure, right? We broke this low, we pulled back, we pushed down and broke this low, right? So I don't want to insult anybody's intelligence, but what I want you to understand is price moves the same way no matter what. This was where we started, the top wick of this candle. Price pushed down. It pulled back. Where did it pull back to? Your freaking zone, right? Gave you an entry. You could have entered here. You wanted to see these lows broken. It broke these lows. It pulled back. Where did it pull back to? Y'all can say it. You damn skip it. Your golden zone. So back to your golden zone, gave you an entry. Notice you haven't gotten a 78. You're not guaranteed to get a 78, right? Now there's an imbalance here, but you're not guaranteed to get that. So eventually, right? Eventually, if we mark this up eventually price is going to have to come back and mitigate this imbalance. And I'm marking it up for a reason, but let's just continue, right? Let's walk this down. So the last movement we got, which was on Friday, I posted this trade or a fraction of this trade in Discord. So we got a great push down. And if we drop down to the 15-minute, what happened, guys? Price flattened out across here. It gave you a low. It pushed up. It pulled back. If I throw a fib on this, it pushed up. It pulled back. Where did it pull back to, Todd? You got it. Your zone. All you're waiting for is a break and pull back. Or, guys, if you're like me, you anticipate this kind of action. You know we're going up. So maybe you hop in this trade right now. Maybe your stop is below here. There's no right or wrong way to do this. There's your way and my way to do this. What I'm trying to explain to you is if you want the 11 pip stop loss, you have to be able to anticipate these moves. And you anticipate these moves based on your understanding of price and what needs to happen. Okay, let's go back to the 4-hour. You already see what needs to happen. Just like when we broke this low, we pulled back 50%. We just broke this low. Here's the pullback 50%. So if you got in here right now, right now on Sunday, the 50% that's 52 pips with a 10 pip stop loss. I can't tell you guys how to trade. And I can't tell you how to chase your percentage, right? But let's just say you got that 10 pip stop loss. This is a 12 pip stop loss. But let's just say that's where you're at. And this went 48 pips. That's 4%, guys. That's easy money. It's easy. And you see how the market is moving, okay? That's just one example of how you can kind of understand what's going on, okay? So let's talk about the daily move or the weekly move, right? So we already know if we look at this weekly candle, there's a wick. We already know we talked about maybe the next candle going up and going down. Well, we have already identified an imbalance. This is probably a good spot. If this thing takes off and pushes up, this is probably a good spot that we can target. Hey, price is probably going here. And if you traded it up to there, then you can look to take sales. Or maybe you don't want to trade it up to there. Maybe you're just waiting. Maybe you're a cautious trader and you say, I'm not going to touch it. But it goes up and taps your imbalance. Then it starts breaking structure to the downside. This is a good starting point to resell this pair. Okay. So let's go back to this daily candle. If we're just talking the daily candle, the last 2 days, the price pushed down, right? You could say, hey, the market opened up, it retraced, it pushed down. It retraced, it pushed down. So if I measure from this wick to this wick, this pullback is going to be close to the 78. But now price went from this wick to this wick on this daily candle. We've already broken this down on the 4-hour chart, right? But if I'm just going to measure this last daily candle, and I'm going to drop down to the 4-hour, right? So we can see it. So the last daily candle went from here all the way down here. Now the pullback from what this measurement is telling you, this pullback needs to go. This is the same, basically the same move that we measured on this 4-hour chart. I just wanted to show you that you can use this fib uh, on whatever time frame you want to, but we're measuring the same thing. So it's a 50% retracement. Uh, that's about 50 pips from where it is right now. Now, there's probably a great chance that it's going to go at least to this 4-hour order block, which is on the top side of your 60% retracement. So you'll probably retrace at least 60 pips, or it's a good. You can probably anticipate that that's probably what's going to happen. Again, you already know you got those. You can have that small stop loss because here on the 15-minute, we've broken this high. We pulled back. So here's an order block that's right here in your zone, 15-minute order block. Then there's an imbalance on the other side of your 78. So there are good targets for this pullback. You just have to decide which one that you want to take. I'm going to delete these fibs, but that gives you a perfect idea of how I, first of all, framed the market. I went to the monthly, the weekly, the daily. You can go down to the 4-hour. You can go down to the 15-minute. You can go to the 1-hour, however you trade, right? You can break this all the way down. You can go as low as you want to, framing the market to see where your trade is going to happen. At the end of the day, it's going to give you a range, right? And you're going to have to understand that the market is a breathing, moving apparatus. And if you understand the inhale and exhale, that's all basically the inhaling and exhaling is this type of action. If you understand this, you're going to be a great trader, man. Because those wicks are telling you that we're retracing. You just have to read the room, right? You have to decide whether or not this is a good place for you to enter that trade. That's why you have to have criteria like, hey, it breaks structure on this time frame, right? Maybe you're not trusting. You want to see it break structure on the 4-hour time frame. That's fine. Maybe you're a more seasoned trader and 15-minute works for you. That's fine. Neither one of you are wrong in what you want to see. You just have your preference, right? So we need to be able to break this down on those levels. Like, what is your entry criteria? What do you like to see? Maybe you don't want to trade weekly candles that end with wicks. Maybe you only want to trade weekly candles that end with order blocks. All of that is up to you. But once you find what works for you, you have to hang out and execute that in a sense. All right, so let's go to my favorite pair, UJ. Ooh, ooh, ooh. All right, let me remove these 20 drawings. The reason I'm big on UJ because the dollar made that massive move, from basically way down here, right? The dollar made a massive move up. It pulled back, right? Then starting last year when we started raising them interest rates, well, it was 2 years ago, I guess, we started raising the interest rate. This is a gigantic move, guys. It's gigantic. But when you step back and you look at this on the chart, it makes perfect sense. All this makes perfect sense. Price came from here to here. We broke this high. What happened? Golden zone retracement. Meander, negative 27, right? We're not making this up. This is just how it works, man. If you were a trader back in 2011, right? If you was a trader back in 2015 and you saw this move from 2011 to 2015, the pessimist in you would have said, man, this ain't gonna go all the way back. Price ain't gonna drop all the way to 100. It ain't gonna drop $25. Jackass, it dropped $25, right? Now it took 6 years, right? Like it took from May 2015 to August 2016. So that was just 1 year it took to drop. But don't let the time frame intimidate you guys. Like it's going to happen, bruh. This is how it works. We're not making it up. It's not going to change because me and you are having this conversation. Like this is how it works. Why am I telling you this? Because all you have to do is line these dots up, right? Price came, we broke this high. We was way up here, like just a couple of months ago, we was living high up the hog. The dollar is great. The dollar is falling. Everybody's telling you how the greatest currency ever known to man, which is the United States dollar, they're telling you how bad it is, and you need to go give it up. Y'all giving y'all dollars up. Please give them to me. So all of y'all believe the hype. Y'all believe what y'all reading them tabloids, the U.S. papers and the U.S. news. Meanwhile, on the chart, the dollar comes right back to retest its high and bounces. You fools. No, price comes back, does exactly what it's supposed to do, guys. Did exactly what it's supposed to do. It bounced. It bounced, right? Now, while I do believe that the dollar will fall, right? I believe the dollar is gonna fall, but I still have to trade the chart. And what does that mean? When we bounce here, right? When we bounce here, I gotta understand, bruh. Let me break it down for you folks. This is the top. This is the bottom. Okay? We're bullish. So either price is going to go up and we're going to break this high, or price is going to go up and we're going to break this low. That's a good question. I hear y'all asking me, well, Todd, how do we know what it's going to do? We don't. But what I do is I measure from this high to this low because we did break this low, right? We broke this low. We retested. If it was going lower, wouldn't it have, after we retested, shouldn't it have broke this low to go lower? Yeah, it should have, Todd. So, but it didn't. So it's going up. So when we push down to break this low, when we pull back, it needs to pull back to the zone, right? Yeah, that's right, Todd. It do need to pull back to the zone. So let us look. This should be everybody's target. Now, above our target, we would have to be blind if we don't see this huge ass imbalance. This is a huge imbalance. I'm not blind, so I can't ignore this, right? If y'all ever want to get jiggy with it, let me erase this fib right here. I'm not going to erase it because I need to see that 78. You see where that 78 is in that huge imbalance? You see this bearish monthly order block, right? Here's the bullish monthly order. If we had framed this, we'd have came down here and put our level here and here, and we would have a trade that has clear space from here to here. We have 700 pips of fresh air. 700 pips. I don't know what the news is going to be. I don't know any of that. But I know that we have a bullish order block on UJ. We got 700 pips of running room. And all I expect to see is a pullback and somebody shoot the cannon off and we trade to the upside. I got 700 pips, right? This, this is the way that I see the market. This is the way that you should see the market. This is the way that we anticipate what our trades will be. And here's what I would tell you. I don't give a damn what goes on tomorrow or next week, or going forward. A lot of you guys are going to tell me, hey, Todd, the moving averages are here. I got it. I got all that. I understand it. All that stuff, you can file it in your mental Rolodex. On this weekly chart, we're above the moving average, right? I do expect a pullback and I expect a blast off. Everything, if we put all the information together, the only thing that I have against me is this moving average on the monthly. But everything below suggests to me, moving averages below, everything suggests to me that we going, right? So all I am doing as a trader is I'm looking for bullish movement. I got 700 pips. If you got a personal account, once you get this pullback, you can hop in that thing, you go to sleep for 700 pips. Obviously, there's going to be some give and take, some pullback. But my point is this. UJ ran up like 200 pips Friday, man. Like Friday. Let me see how many pips that thing ran. I was in AJ. Damn, 300 pips. Come on, bro. Like, y'all see what's happening. We ran right into this daily order block. We're going to get a pullback. Y'all can call it God's plan. You can call it whatever you want to call it. Maybe, like we haven't been getting 50% pullbacks lately. Maybe we get it, maybe we don't. But the key here is we have an understanding that the market needs to get here to this, at least to this 50% mark, right? And probably higher to that imbalance up there. So we have plenty of room that we can run, and we have plenty of reason to believe that we're going to run to those areas. So when I mark my spot on this daily, I don't necessarily like this color because it's so dark. All right, I want to drop down here to the 15-minute to see what's in my area. Ooh, look at that huge imbalance. Oh my God. Oh, that's lovely. Oh, look, price got flat, right? We haven't broke this low, but we ain't broke this high either. So we anticipate price needs to push down. So maybe you're waiting for price to break this low. At any rate, once it starts pushing down, I'm trading this. Here's my zone. Here's a huge imbalance. Now, here's what I can tell you, because price is going to push lower, if you're a person that believes it's going to push lower, maybe it doesn't need to close this entire imbalance. Maybe it just taps an order block here and goes higher because eventually it's going to come down and close it. But there's a good chance that some of this imbalance will be mitigated. If you threw the GAN box from this wick to this wick, you get the middle, the 50%, which is, I'm just going to leave this yellow box. So maybe we push all the way down from here. So if I catch a trade from this low to here, it's 162 pips. These are just moves that I'm anticipating. Doesn't mean that they're guaranteed to happen, right? If I fib from here to here, What do you think my pullback is going to be? If I fib this green candle here to here, my 78% is right here. You see that? So as a factor of confluence, I like it. I like it a lot. So I anticipate a move down. And this is exactly what I do when I trade, right? No gimmicks, no fakes, none of that. That's exactly um, how I come up with my belief system. And it's just based off of framing the market, right? Um, I showed you an example of framing with UCAD, right? I did the exact same thing with this one without drawing all the lines on my box. So if I'm framing this, there's my monthly order block. Boom. Where's my low monthly order block? It's right here. Boom. If you drop down to the weekly, there's no weekly bearish order block up here, unless you want to, unless you want to utilize this doji candle as your order block, which I personally would. I know some of you can have a little heartburn doing that, but if you're trading like me, these are your order blocks, right? Um, and I would even say that this doji candle here is a new order block. But the point is, your trade is going to go from here, right? It'll pull back into your order block and go higher. Now, on a lower time frame, there's another order block here. So let's drop down and get our daily range, right? There's a daily order block here. There's the top of your range here. So all we need to do is break this daily order block. You see we ran right into it. It's going to pull back. Price is going to pull back. I look for it to break through this daily order block. Remember this red zone right here is your zone from price pulling or price going down and needing to pull back up here. So this is your 50% from that move, from the move down. This is your 50% retracement. So we can anticipate going into this zone. So we know that we're going to get a pullback and we at least go into this zone. High probability move. And you see, once you pull back, this is it's a 500 pip move to the zone. It's a lot of advancements that can happen in 500 pips. Hopefully, you guys have watched this video and have some legitimate questions. A lot of times when we have these conversations live, the Zoom ends up being hijacked. But by recording this video and you sitting through it, now I can be prepared to answer some questions that you have solely on the things that I said in the video. So this is a example of how you can frame the market and you can understand where you are in the move and where the move needs to go. And you won't be confused as to where the trade is going, right? So by understanding that this is where we need to pull back to, you're not confused. You don't have to trade anything, any moves that go lower, you don't even have to participate in that trade. You can wait. You can wait for moves. You can say, hey, I'm only interested in 4-hour bullish order blocks, right? So when you get a move that pushes down, you can say, I'm not playing. Once you get that bullish order block, you can say, okay, I'm getting in. and you can trade it straight up to this. Once price hit here, you can hit your take profit and you can be done. That's a way that you can trade. I mean, if it works for you, it works for you. But you guys have to find a system that works for you. And to me, if you know where the trade is going, you can just trade in that direction. You get a bullish order block, you hop in the trade, right? Once it gets, up here or whatever, you can take your profit. It pulls back, gives you a bullish order block, you can hop back in the trade. It goes up, take your profit. I don't know how you want to do it. For me, this is this works, man. And I can't really I wish I can make you guys see the market the way I see it, but some of you just won't ever see it the way I see it. For me, it's very simple for me to go up and see what needs to happen on a higher time frame, and then drop down and draw it out on my chart, right? It's it's how you can enter the trade and hold your trade through news events with confidence because you know what needs to happen. It's the exact reason that I caught that AJ trade, and the news wicked me into that trade immediately in the profit. It's because the charts tell you what needs to happen, and the news just pushes price to that area. Um, so if you guys have any questions, now is the time to ask. Hopefully that helps somebody.